Hi guys, welcome to my YouTube channel. Here I am back with another informative video. So the topic of discussion is what are the tax benefits of buying a G-Wagon for your business in 2025 under section 179 reduction. If we talk about its introduction, purchasing a high-end vehicle like the Mercedes-Benz G-Class, G class, commonly known as the G Wagon, for business use can provide substantial tax benefits under US tax laws. Business owners often leverage these tax incentives to reduce their taxable income significantly. This article will explore the various aspects of claiming tax reductions for a G Wagon, including Section 179 bonus depreciation, weight requirements, and business use percentage requirements. By understanding these provisions, business owners can make informed decisions that align with their financial strategies. Section 179 deductions allow businesses to deduct the full purchase price of qualifying equipment and software purchased or are financed during the tax year. The incentive is aimed at encouraging businesses to invest in themselves by purchasing the new equipment. What are the deduction limits for tax year beginning in 2024? The maximum section 179 reductions were about 1 crore 22 lakh dollars. However, this deduction limit is subject to phase out threshold if the total cost of the section 179 property placed in service during the tax year exceeds 30 lakh and $50,000. In the reduction, the limit is reduced dollar to for dollar above this threshold. This reduction ensures that only a small mid-sized business primarily benefit from this reduction. So what are the qualifying property? To be eligible for Section 179 deductions, property must be tangible personal property such as machinery, equipment, and certain vehicles purchased and used for a business purpose more than 50% of the time, then placed in service during the tax year for which the deduction is being claimed. Then comes vehicles and Section 179. Certain vehicles include G-Wagon qualify for the Section 179 deduction if they meet the following criteria. The first one is weight requirement. Gross wheel vehicle weight rating is for a vehicle to qualify under section 179. It must have a GVWR of more than 6,000 pounds but not exceeding 14,000 pounds. This classification includes many SUVs, trucks, and vans. Then comes the sport utility vehicles (SUVs). The maximum section 179 deductions for most SUVs placed in service in tax year beginning in 2023 is limited to $28,900. This apply to four-wheeled vehicles primarily designed or used to carry passenger over public streets and highways. Then, what are the expectations to the SUV limitations? The first one is vehicle designed to seat more than 9 passengers behind the driver's seat. Vehicle equipped with a cargo area of at least 6 feet in the interior length, that is an open area, and designed for use as an open area but enclosed by a gap or not readily accessible from the passenger compartment. Vehicle with an integral enclosure that fully encloses the driver compartment and load carrying devices do not sitting behind the driver's seat and is not accessible from the driver's compartment. Business use. For a vehicle to be eligible for the section 179 deductions, it must be used more than 50% of for the business purposes. The deduction applies only to the portion of the vehicle's cost that is used for the business. For instance, if a vehicle cost under $50,000 and is used for 70% for the business, the amount eligible For the section 179 reduction is $35,000. Then what is the limitations and phase outs? The first one is dollar limit. The total amount a business can deduct under section 179 for all the qualifying property include vehicles is 1 lakh and 160,000 for the tax beginning in 2023. This limit is reduced dollar to dollar by the amount by which the total cost of section 179 property placed in service during the tax year. So the total cost of section 179 property is to about 179 property placed in service during the tax year exceeds 28 lakh 90,000 for tax years beginning in 2024. The maximum section 179 expense deduction is 12 lakh and 20,000 dollars. This limit is reduced each year. This limit is reduced by the amount by which the cost of the section 179 property placed in service during the tax year exceeds the maximum section 179 expense deduction for sport utility vehicles placed in service in the tax year beginning in 2024 is 30,500. The second one is taxable income limitations. The section 179 deductions cannot exceed the business taxable income for the year derived from the active conduct of any trade or business during the year. Any amount to not deducted because of this limitation can be carried forward to the subsequent years. Then comes depreciation limits. Vehicles used for the business purpose are also subject to the annual depreciation limit under the Modified Accelerated Cost Recovery System (MACRS). These limits vary depending on whether the special depreciation allowance applies. With a special depreciation allowance, the total depreciation reduction, including Section 179 for a passenger for automobile, is limited to $20,200 in the first year. With a special depreciation allowance, the total depreciation reduction for a passenger automobile is limited to $12,200 in the first year. To qualify for the section 179 reduction, vehicle must meet specific weight and usage requirements. They must be used for more than 50% of the business, and reductions are subject to annual limit and phase out threshold. For further details, it may be referred to an IRS publications 946 How to Depreciate Property and IRS from 456 instructions. Then calculating the deductions. The process for calculating the section 179 deductions and bonus depreciation involves several steps. The first one is determination of the purchase price. The total cost of the vehicle must be identified including taxes. The second step is assess business usage percentage. The percentage of miles driven for the business purpose relative to total miles driven should be calculated. Then section 179 deductions up to maximum limit of $1 million must be deducted based on the business use percentage. Then bonus depreciation, the remaining cost, if any, under the 100% bonus depreciation rule should be deducted again based on the business use percentage. What is the process for claiming the deduction? The first step is completing the IRS form 4562. This form is used to report depreciation and amortization, including the election to expense certain property under section 179. Then comes relevant information. The total cost of section 179 property placed in services and business use percentage must be included, and allowable deductions must be calculated. Then comes the section of the tax return from form 4562 should be attached to the business tax returns to officially claim the deductions. So then that it is what are the eligibility requirements for to qualify for the bonus depreciation? The property must meet the following criteria. The first one is type of property. The type of property must be tangible and the depreciable than original use. The original use of the property must commence with the taxpayer, or the property must be acquired to new taxpayers, then acquisition and the placement. So that was all about the topic of tax benefits of buying a G-Wagon for your business usage. I hope this will have been beneficial for you. So do subscribe the channel for more helpful videos.